Hello again. So after the fireworks of John Kerry being interviewed by my boss, we have the unenviable task of re-energizing the room after your lovely lunch. Before we get going, I'd like to remind everyone there's a URL on the screen behind me, which you can use to file questions as the panel goes on. So thank you both for joining us today. Claire, let me start with you. The WBCSD launched the Business Manifesto for Climate Recovery last week. Can you just briefly walk us through some of the key ideas and findings in there?
Thank you. Well, great to be here with a great partner who we've worked with a lot. So I think that what we found is traditionally when we show up at these big policy events, that's trains.
The train, right? Don't worry, it's fine, it's under control.
But it was protesters stamping upstairs. Is that we'll often show up with a bunch of policy asks, and we'll say, well, if only policymakers would do X. And actually, what I think we're seeing is this energy around public-private collaboration, which we saw a lot of last week, a sense that businesses are there, finance is there, policymakers need to produce a bunch of things, and this is very much a joint product. So the manifesto, which is available online, was an effort by our members who represent all sectors and all regions, big sustainable companies, to set out what we thought were the most important action areas and to show what we were going to do about it and what we wanted policymakers to do about it. And we started with methane, fortuitously. We had the idea as well, simultaneously along with the methane pledge. We think actually that the private sector thinks we should be at minus 40% by 2030, so we think there is an opportunity to go further and faster. And we went through a whole series of things structured around a sort of reduce, remove, report framework. And then the thing that really caught the sort of attention of COP last week is it's all about delivery, whether it's a government delivery or a corporate delivery. And actually there is no mechanism for docking into the COP process all of this amazing decarbonisation action from the private sector. So we think there should be something, and we've called it corporate determined contributions, that is an annual reporting mechanism based on existing data for the corporate sector to show up at COP and say, we promised you X, and this year it's X minus Y, and hold us to account. Let us be part of building this trust and building this transparency.
So yes, I want to get back into that in a second, but you've worked in the public sector, in government, and you've worked now talking a lot to the private sector. Do you agree, this is one of the points that came up in the conversation with John Kerry, do you agree that the private sector is now very much ahead of the game compared with government?
I think in many cases, I mean, look, we are lucky enough with Peter's guidance and vision and leadership to work with the world's most ambitious sustainable businesses. And I wouldn't for a second suggest that what our companies commit to is universal. But I think what's very striking about COP is last week was by design, this unprecedented momentum. We saw amazing real commitments, tough partnerships on methane, on coal, on forests, on money. It was endless. And if you read what is called a non-paper, which is how this is COP term, if you actually look at what the negotiators are focusing on negotiating this week, almost none of it is referenced, almost none of it. So it feels like all of that extraordinary action and delivery and focus is kind of over there, and over here is business as usual. And that cannot be. This is a public-private partnership. And I think that sense of urgency, ambition, in many cases is running stronger in the private sector, but people don't trust it. And so the question for us is, how do you build that trust and how do you deliver it in to a COP process that is not set up by design to be terribly inclusive?
Thank you. So Peter, I want to grab that idea of greenwashing. We had, in the last week, we've heard both Greta Thunberg and Larry Fink denounce greenwashing, probably the only thing that two such different people can agree on. So in the manifesto, you talk about developing a new global framework for what you call CDCs, corporate determined contributions. Can you talk to us a little bit about how you sort of think about that and ideas in terms of how we can actually hold companies to account? Because as Claire said, there is a lot of skepticism about a lot of these pledges that are being made.
Sure. I think there's two reasons why this is critically important to hold business accountable. The first one is we had 100,000 people on the streets on Saturday here in Glasgow. There's very little trust amongst those people that whatever happens in the COP is real. You know, there's lots of CEOs making commitments. We work with many of them and we know they're committed, but we haven't built the trust. And secondly, the other big thing in this COP is finance has really come to town as well. You know, the Mark Carney, GFAN, with enormous amounts of money now taking climate risk into their allocation and valuation models. For that to work going forward, we need to hold business accountable by asking them to be maximally transparent. So the announcement that got little press is the one that I think is actually the biggest announcement this week, and that is the ISSB, the International Sustainability Standards Board, which for all you non-quantoids in the room are basically going to be the accounting rules for ESG reporting. And initially, ISSB will only focus on climate and climate-related disclosures. What that is going to do, each company in the world will have to report its greenhouse gas emissions in a standardized materiality-based format so that investors can compare one company to the other because they're talking about their emission profile in the same way. If you do that, however, and if you think through a supply chain, you get a whole lot of double counting because, you know, in my emissions, also the emissions of my suppliers will be identified. For that, we need to get much better Scope 3 accounting, as it's called, because that will allow you to eliminate double counts. The minute you have a standardized reporting framework, eliminating the double counts, all of a sudden you can consolidate the emissions from all businesses in a country or in a supply chain. That's what we have called the CDCs, the corporate determined contributions. Because like Claire said, in the COP we talk a lot and we judge countries by their NDCs and their ambitions. 70% of the world's emissions are private sector originated, and they're not part of the NDC system. So by building this CDC framework, based on existing initiatives and announcements that were made here this week, so not with a whole lot of extra reporting for companies, you're going to create a consolidation of that 70% of emissions, and then in year 2, 3, 4 from now, we can say, okay, hey, in COP26, Mrs. CEO, you made this commitment. We look at your reporting, you are on track or you're not on track, what are we going to do? And then it becomes a real economy conversation.
And is that part of the TCFD?
Well, yeah, it's part of the... So
in terms of the incentives for companies to sign up to this, is that...
In TCFD, you have 3 announcements. You have to integrate climate and climate risk into the governance. The second is you have to report your progress in a standardized framework. That's this part. And the third component is you have to build what is called reference scenarios or strategic scenarios on how this over long term will impact your business model. So this CDC, the ISSB is all playing into the second of the recommendations.
And how optimistic are you? Are you seeing signs that also financial markets will, are starting to punish companies for not fulfilling their sustainability goals, or is that something that's either going to happen in the future or might not happen at all?
So at the moment, it's, if I'm honest, a bit of a Wild West. The conversations that we're now having with some of the main investment houses is, here is the ISSB. Let's assume in a year from now we'll all be reporting the same data. What of that data is actually decision useful for an investor? And how will it then influence or impact the capital allocation and valuation models? And what you then hear is some investors say, well, no, that's non-financial. We're not going to have it in the valuation models. Others are saying, yeah, we're going to build proprietary valuation models, and that also needs to be standardized. But what I've seen, talking to the CFOs that we have in our CFO network in WBCSD, in the last 2 years, from being not very interested, all roadshows with all companies have now specific questioning on what are you doing on climate, where are your risks, what are you going to do to get net zero? It needs to be more professionalized in the coming years. Again, the ISSB will help with the data flow, but the attention is on.
Can I just make an obvious but often not reported point? So the level of standardization and reporting framework, again, these obligations, sometimes mandatory on businesses, are greatly in excess of what governments are being asked to do. So NDC reporting is not standardized, and the long-term strategic plan that has to sit behind a government NDC is wildly variable. And this is good because we want commonality of data. But again, we are holding our business and financial sector to a far higher bar than we are with our governments.
Interesting. And for either of you, how much of a difference do you see in terms of engagement from publicly traded companies versus privately held companies? I mean, publicly held companies, of course, are responsible to their shareholders, to investors like BlackRock, who are pushing this issue more and more, becoming more and more conscious about it. Do you see more of an engagement from the public sector, publicly traded companies versus privately held companies?
No, I don't actually see that. Like I said, we have more than 50 companies in the CFO network at the moment. I would say 15 of those are privately held companies. The issues are the same. You know, the climate conversation and the race to zero are not just whether you do or don't report to capital markets or to your family shareholders. It's now really a business transformation discussion, which if you do not get it right, you'll be out of business, no matter whether you're public or private. Of course, the private companies have a little more freedom in what they do or don't disclose. There's differences there. But what this will do, and that's the one thing you should remember from these few minutes here, is 3 years from now, as reporting will be standardized, the cost of capital of business will be determined by its financial and its climate-related performance, because cost of capital talks about risks. And cost of capital is as relevant if you're a private or a public company. It may not be equity investors, but it will be on the financial, on the lending markets or the bonds.
Thank you. Claire, so I'd like to ask you a little bit about, to step back a little bit. You, of course, were involved in the early stages of planning this COP. Can you just tell us a little bit, it's Tuesday now, the second week, where do you think we are in terms of the agreements that we've seen? How good are they? And in terms of what's coming up in the next few days, what's your sort of best guess about where we might land?
Thank you. I mean, this was supposed to be the inflection point COP, both by statute, if you like, after the Paris Agreement, but also I think this sense that we had this unassailable scientific base. We had companies now who were prepared to be involved. We'd had dramatic changes in technological cost and application. And I think it's pretty good, actually. So my sense is if you were to say, wow, the world has come together to focus on methane, a gas we weren't even talking about 3 years ago. We have now seen 90% of global emissions covered by some form of net zero policy. Again, net zero was kind of a dirty word a while, 2 or 3 years ago, because there was a sense of you needed to reduce but also remove carbon in a mitigation hierarchy. But these were two sides of the equation. We've seen coal, the world's most polluting fossil fuel, something that Mike Bloomberg has been incredibly supportive in. When I set up the Powering Past Coal Alliance with the my Canadian counterpart in 2017, it was unimaginable we could have over 100 countries committed, and we could be seeing now super clever deals putting finance into specific country targets like South Africa. GFANs, I mean, we're going to have a massive row about 100 billion. It's really important, but we've got 130 trillion of private capital prepared to invest in the transition. And of course, nature, the nature COP ran out of steam. Nature's on the agenda. So if you add up all of these deals, and if you think about the world leadership and the momentum that we saw last week, I think it looks pretty good if you care about the Keeling curve. If you care about what then happens in a 198-way negotiation, this is really tough. I would encourage people to download the non-paper. It is called a non-paper. It is a list of things that now need to be resolved in the negotiations. And the things that we did last week, in about a 4-page of bullet points, there are maybe 2 or 3 referencing this need to bring everybody into the table. And so I think the risk factor is allowing this ecosystem to define whether or not it's been successful, where from our perspective, we can see this extraordinary activation of public-private partnerships that are really starting to move the dial. So I think, we're in a slightly difficult situation. The most likely outcome is that there will be a text. Article 6, I think, will be resolved, although my sense is it'll get watered down, and this is a challenge. By the way, the very heavy pushback against the voluntary carbon market initiative, which is a wonderful lighthouse for many of the things we need to solve for carbon trading. Again, this is indicative of some of the politics. But I think we'll come down with Article 6 resolved and essentially a call for countries to go away and come back every year and report their annual progress, which plays brilliantly to the CDC because we want annual reporting. So the devil's going to be in the detail. But let's not let a very engaged and committed COP ecosystem call out whether this is a success or failure. The fact that we've seen such extraordinary momentum and commitment for me already, and you know, an IEA saying if you add this all up, it adds up to 1.8.
Right.
We were at 3.7 post-Paris. This is real progress.
And can I ask you, Article 6, there's a lot of chat about it, we all sort of bandy it about it, but just to help our audience, what are the sort of 2 or 3 things people should really be looking for in that deal? Because a lot of people say no deal on Article 6 is better than a bad deal on Article 6.
Well, so can I say something really radical? Because I now can, because I'm no longer a politician. I don't think it matters whether or not we resolve Article 6 in terms of getting the financial flows we need to flow from carbon sources to carbon sinks. And I was on a panel last week talking about the voluntary carbon markets with a very powerful representation of indigenous populations who are never consulted enough when we talk about these markets. And they're saying, we don't care if it's a compliance market or a voluntary market. We want the money to flow to high quality projects into the hands of the people who steward the land best now. But Article 6 is essentially an agreed market mechanism that particularly strips out double counting and allows for transparency of trading between sources and sinks. So it's a way of bringing into the whole debate a market mechanism. A lot of the lighthouse work has been done by the voluntary task force. So we've already resolved. Think of this as trading gilts or corporates. They just need to trade in one place, need to have some level of confidence, you need to have an inventory, you need to have a pricing structure. That work has been done by the voluntary market task force. If we get compliance markets, great, but I think governments will be trading on a national level regardless very, very soon.
And you know, I feel sorry for the negotiators who are going to be having to go through all of this at 3 a.m. in the morning on Saturday, which is what it's
and they're negotiating the colour of the grayscale in the reports that will accompany Article 6.
Yes.
It is that contentious. This is really tough, and you're quite right, very good not to be a negotiator.
Yes, exactly.
And we must wish them well in the process.
Yeah, lucky for us, we just get to enjoy events like this and really interesting conversations like this, and unfortunately we're out of time, so let's wrap up, and thank you very much for joining us today.
Thank you.
Thank you.